Hello friends, a very warm welcome to my channel. In this video, we are going to talk about Tata Technologies, which is one of the leading companies of the Tata Group, which got listed in the stock exchange just a year back. If you're new to the channel, please do subscribe and hit the bell icon to get updates of all the new videos that I upload. Before we begin, a small disclaimer, this is not a recommendation video, we are discussing just for case study purposes. This stock is chosen by the audience in the Telegram poll that we present. I am a SEBI Registered Research Analyst and me and my clients may have positions in this stock and I may change my view depending on the developments of the company every quarter. This is a crisp video, not a full-fledged deep dive analysis. So I'll be covering only the important points and share my view on the stock at the present valuations. So this will be the flow of our discussion. We'll talk about the business model in brief. We'll look at the chart performance in the last 1 year. We'll talk about the financial performance in the last 4 to 5 years. We'll look at the reasons why the stock has shown a deep correction from the highs. We'll understand the outlook of the management going forward. We'll talk about the valuations. We'll understand the risks of investing in this company and then form an overall view on the stock. So Tata Technologies is not just a software company, it's a global engineering company focusing more on the auto sector. It is the world's #1 India-based global auto engineering company. They work with different clients like Ford, Honda, Airbus, all the reputed OEMs of the world work with them. And this works on advanced technologies with those company, develops products right from design, development stage, and also makes prototypes for them. Keeps on working on new technologies like artificial intelligence, the use of ADAS and automated driving systems, etc. In the electric vehicle space, it is the second largest in the world in terms of the engineering technologies. This company has high dependence on the auto sector as 85% of the revenue comes from auto sector and the rest of the revenue comes from aerospace, construction and agriculture. More than 12,000 people work for this company. So this is the broad division of their segments. About 80% of the revenue comes from services and 20% from technology solutions. In the technology solutions business, the company implements selected tools and softwares of other vendors for digital transformation at its client space. So this is a recent 1 year before IPO. The IPO price was about 500 and it had a very good listing at somewhere around 1400, which is almost 3x. So there was too much of hype of this IPO at the time of listing, and then after we saw a steep correction and now the stock is trading at somewhere around 800 rupees, which is nearly half compared to the listing price. And still, if you see on the charts, we don't see any consolidation, we don't see any support. So there are no signs of the stock getting bottom out at these levels also. So at what levels the stock may make a bottom technically, we'll have to wait and watch. And fundamentally, by looking at the valuations, we'll get a rough idea. This is the revenue trend in the last 5 years. The company did a revenue of about 2,500 crores in FY21 and did about 5,000 crores in the trailing 12 months. So in the 5 years, the company has doubled its revenue. But the revenue growth has not been consistent. In the 5 years, CAGR has been at 12% and the last 3 years has been at 29%. And again, in the trailing 12 months, we see a slowdown and the company has shown a growth of just about 2%. EBITDA also shows a similar trend. In FY21, they did about 386 crores of EBITDA, which rose to almost 3x, about 940 crores in FY24. EBITDA margins are more or less stable. They did an EBITDA margin of about 9%, which was the highest in FY23, and slight reduction in the EBITDA margin to 18% in the trailing 12 months. Going forward, the company aims to maintain the EBITDA margin of around 20% in the long run. It's a cash-rich company having strong cash flows and has healthy balance sheet with good amount of cash balance and investments. It's a good dividend-paying company having return ratios of almost 28%. If you see the customer metrics there, we observe that the larger customers have seen a small reduction and the smaller deal wins, so the smaller customers have increased. The greater than 50 million customers have reduced from 3 to 2 year on year, and the smaller ones, which is 10 to 15 million, have increased from 3 to 6. Overall, the number of customers have increased from 28 to 30. There is a steady increase in the headcount from about 12,450 to almost 12,680, and the attrition rate is somewhere around 13%, which is under control. Now, what led to the fall in the stock price? In fact, a very steep fall in the stock price in spite of decent numbers by the company. Overall, if you see in the last 6 to 12 months, the demand has not been that great. The company has been signaling that the customers are delaying their projects, and that's why the growth has reduced. And in terms of valuations, the market had very high expectations from this company in terms of performance. And as the performance was below the expectations, the valuations have now got derated. Before we move forward, if you have not joined the Telegram channel, do join today by searching my name on Telegram. We have more than 6,000 people as a part of our Telegram channel. It's a free channel. Every day morning, I share my views on the market on the channel, which helps you keep a track of the markets and increase your portfolio returns. Now, what is the growth outlook of the management going forward? The company has been doing different collaborations and partnerships. In terms of the recent collaborations, they did a joint venture with BMW called BMW TechWorks in India, and from this, the company expects to do decent amount of revenue going forward. They've also collaborated with their group company, which is Air India, to make experience of passengers better in terms of technology and experience. They've also collaborated with a Korean semiconductor company called Telechips. In terms of order book, the company feels that the order book is still healthy and the margins would be about 20% in the long run. And this year, H2 is going to be better than H1, but the management hasn't given any specific growth guidance in terms of numbers when we talk about revenue. Coming to the valuations, the stock now trades at an earning multiple of about 50. Earlier, when it got listed, it was trading at somewhere around 85 times, which was very expensive. Then it consolidated for some time at around 60 times, but due to the underperformance in the recent quarter and the weakness in the market, the correction further continues and now it trades at somewhere around 50 times. So this quality of companies belonging to Tata Group working on niche technologies would not be available at a very cheap multiple of 20-30 times. But when the market is willing to give you 50-60 times the multiple, they also expect you to deliver such growth. So as the growth is not coming, that's why the valuation multiple is getting derated. Now comes the question whether further the valuation can get derated. It depends on the result of H2. If they give a good bounce back in terms of results in H2, then the valuation can stabilize at these levels. But if it continues to underperform, then further derating is also possible in this company. In terms of price to book, it trades about 10 times and market cap to sales about 6x, which are not very cheap compared to the other companies in this space. Now, what are the risks of investing in this company? There could be a slowdown in demand because the management is indicating that the demand has not fully recovered. The customers are giving them projects, but they are giving smaller projects compared to before, is what they are telling in the earnings call. Competition in the space is rising. They are competing with companies like KPIT and a lot of international players. The company has high dependency on auto sector as 85% of the revenue comes from this sector, and any kind of a slowdown in auto industry globally will impact directly this company's financials. In terms of technology, they have to keep working on newer technologies, otherwise the OEMs would not be interested in working with this company. So now that you've understood the business model of the company in brief, you've looked at the growth prospects of the company, understood the risks of investing, look at the financials, understood the valuations. What is an overall view on the stock? If you're already invested in this company, then you have to be very watchful. You have to monitor the results every quarter. If the company continues to underperform going forward, then there could be a further risk of derating in the multiple even from the current levels of about 50 times. So you may have to shift your money to a stronger company which is growing faster in a similar industry if this company continues to underperform going forward. And if you are looking as a fresh entrant in this company, instead of directly jumping into the stock, let us wait for a couple of quarters and see how the H2 pans out for this company. And when we see the growth coming back, then we may consider entering this stock gradually, as the valuations are still not very cheap for this company. So that's about Tata Technologies. I hope you like the crisp video. If you like it, hit the like button, subscribe to the channel. If you want me to make videos on your favorite stocks, do mention the names of the stocks in the comment section. Do join our Telegram channel. Thank you for watching and have a wonderful day.